Want to know how to turn a small investment into quick cash? Today, we're diving into the world of short-term gains and how you can maximize your profits without taking on excessive risk. Imagine buying an asset today and seeing your money grow within just a few months. Sounds appealing, right? But what's the best strategy? Let's break it down. First, let's talk about what we mean by short-term gains. This typically refers to investments held for less than a year. Think of it like a sprint versus a marathon. You're aiming for quick wins rather than a long, slow build-up. Now, you might be wondering, how can I make money quickly? Here are a few key options. 1. Stocks and ETFs. Stocks can be volatile, but with the right approach, they can deliver impressive short-term returns. For instance, let's say you decide to invest in tech stocks during a boom phase. If you get in at the right time, you could see substantial gains in just a few months. Similarly, ETFs, or exchange-traded funds, can be a safer bet. Think of them as baskets of stocks, spreading your risk across multiple companies. They can still provide short-term gains, especially if they focus on trending sectors. 2. Options trading. If you're willing to take on more risk, options trading might be your thing. Options allow you to bet on the future price of a stock without actually owning it. Imagine you predict a stock will soar. You can buy a call option, and if you're right, you can sell it for a profit. But remember, this strategy can be tricky. Always do your homework. 3. Real estate wholesaling. Ever heard of flipping houses? Well, wholesaling is a different angle. You find a property, negotiate a deal, and sell the contract to an investor before closing. You make a quick profit without the headaches of owning property. It requires networking and understanding the real estate market, but it can be highly rewarding. 4. Peer-to-peer lending. If you're looking for something a bit different, consider peer-to-peer lending platforms. You can lend your money to individuals or small businesses and earn interest on your investment. It's a way to potentially get a quick return, but always assess the risk of default. Now, you might be asking, how do I decide what's right for me? Here are 3 essential factors to consider. Risk tolerance. Are you comfortable with the possibility of losing your investment? If the answer is no, you might want to stick to safer options like ETFs. If you're willing to gamble a bit, stocks or options might be your play. Time horizon. How quickly do you need these gains? If you're aiming for something within a few months, stocks and options are likely your best bet. If you have a bit more time, you might explore real estate or peer-to-peer lending. Financial goals. What do you want to achieve? Are you saving for a vacation, a new car, or just looking to grow your wealth? Your goals will help dictate your investment strategy. Now, let's talk about some relatable scenarios to illustrate these points. Imagine you invested $1,000 in a tech ETF 3 months ago. The sector booms, and your investment grows to $1,200. That's a solid 20% gain in a short time. On the other hand, consider someone who decided to buy call options on a popular stock. They invested the same $1,000. If the stock price skyrockets, their returns could be even higher, but if it tanks, they could lose their entire investment. So, what's the takeaway? Short-term gains can be achieved through various investment strategies, each with its own risk and reward profile. Stocks and ETFs provide a balance of potential returns with varying levels of risk, while options and wholesaling can yield higher rewards, but remember, with higher risk. Now, before you go, I want to hear from you. Are you team stocks or team ETFs? Drop a comment below and let us know your thoughts. And don't forget to hit that like button if you found this video helpful. Next time, we'll dive into an asset class you might not be paying attention to. Trust me, you won't want to miss it. Happy investing!